Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Monday, May 1st, 5:23 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend across the large cap indexes, still avoiding regional banks, commercial real estate, mid caps and small caps continue to lag their big cap brethren, particularly small caps. And that's the hangover from regional banks. Another bank taken over the weekend, and several of them down 15-20% today. That doesn't bode well for the outlook on regional banks. So check over here at the trend gauge. Leaders neutral. A couple of them acted extremely well today. The MO for the year really hasn't been to chase strength. It has been to buy pullbacks to support. But I'll show you two that continued to follow up strength today. And across all three time frames that we track, the short-term 21-day moving average, the medium-term 50-day moving average, the long-term 200-day moving average, the three big cap indexes continue to trend nicely above there, that being the S&P, the NASDAQ, and the Dow. Mid caps and small caps, small lagging, mid bringing up, small bringing up the rear, trailing mid caps as they're trying to improve their technical outlook. So what happened today? Uh, Tight range chop pretty much all day. We showed some strength in the morning, attempted to break higher in the afternoon. That failed. We trended lower in the afternoon into the close. Just chopping. Really accomplished nothing today, waiting on FOMC on Wednesday. We did get some ISM data that was strong at 10 o'clock today, and that impacted the dollar and particularly bonds. We'll take a look at that when we get into the charts. So on the day, mixed closed. Revere Growth 7, this is our 7 ETF growth proxy, up 0.10%. S&P down fractionally. NASDAQ 100 down a tenth, Dow down 0.14, mid-caps just barely down, Russell just barely positive. Global Diversified 60/40, stock and bond down 0.35%. Bonds really taking a hit today. And in-house GROTECTION down 0.18%. Bonds didn't help us either. But we did have one standout very clearly in the portfolio today. We'll go through the tail of the tape and charts of interest. Let's dive right into it. We'll start with the S&P 500. We take a look at the trend on the five major indexes across three time frames. The green line, the short-term 21-day, the red line, the medium-term 50-day, the black line, the long-term 200-day. We get extremely defensive when we're below that black line because all of these bear markets occur under the black line, the 200-day moving average, same as the 40-week moving average. And as long as we're above this, we stay engaged in the market. Below it, we start making a judgment and acting to getting extremely defensive. That's what we did most of last year, dodging these big losses, 27.5%, the maximum drawdown. But that doesn't even begin to hit what we consider the severe losses going back to bear markets in 1970, averaged down 44.5%. You simply can't afford this if you're approaching retirement, and that's why our approach is to protect the downside when the market is in a downtrend and participate when the market is in a healthy posture. And if you're interested in this approach, reach out to me, Don at RevereAsset.com, or my partner, Dan Stewart, Dan at RevereAsset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. So here's the S&P 500. Pretty strong move up off of the bottom last Wednesday. Things were looking bleak last Tuesday and Wednesday, but gap up on Thursday, gap up on Friday on the back of some good tech earnings. You can see we tried to make the higher high today, closed at the higher high. Well, yeah, higher high close. Pulled back a bit as there's about a 20 point, 19 point difference between the futures and the S&P 500, the ES futures, and they ran into, excuse me, some resistance around 4,200 today, and that's when we started to pull back. But really, we're hanging right at the top of this range now. So 4160 to 4170, multiple closes over the last 3 weeks in this range. Basically, it's time for the break. This is the 60-minute stochastic. We are always wary of this and not wanting to put a lot of capital to work when you're on a day 3 above the 60-minute stochastic. Sometimes it continues. Here's day 1 up back here where we had the follow through day at the end of March. And you can see we stayed above there 1, 2, 3. By the end of the 4th day, we started to roll over and we started to continue higher here. We went higher day 2 while we were above there, but now toward the end of day 3, we started to roll over a bit. So keeping an eye on that. When it's completely normal to pull back on the 60-minute stochastic, let's go to the daily. And we're not into overbought yet there. Obviously, there's multiple 60-minute resets in the stochastic before the daily is impacted, but always trying to put the odds in our favor with our best entries. Means you don't want to buy a breakout on the S&P above a recent high when you're already 2 days into the stochastic above on the 60-minute above over bought. It's just you're just setting yourself up for a pullback and a short-term disappointment. Doesn't mean it won't work, means you might take some pain. Same situation with the NASDAQ, which has been even stronger. This is its 3rd day before starting to roll over, and it's holding this breakout above this 321.50-ish level. Can certainly pull back to 320 and it'll still be completely normal after the 2 strong up days that we had last week off the lows. You can see 2 big moves up. Actually, we closed positive on Wednesday. This was when Microsoft gapped up on earnings. The other indexes were down. The NASDAQ was positive, and then followed through to the upside on Thursday and Friday. Tight range today. That's technically a win for the bulls if you're not giving back much of your recent gains. But really, what we need to look for is the reaction to the Fed on Wednesday. Here we got above 34,000 on the Dow on Friday. Tried to move higher today. Pulled back. Same situation with all the big cap indexes. Let's go to MDY mid caps. Reversed at the downtrending 50-day moving average. Stuck between the 21 and the 50. IWM small caps. Tried to get above the 21, reversed to close below. KRE not a good day today, despite the fact that the latest First Republic bought out, taken over by JP Morgan, didn't seem to help. There were multiple, as I said, banking, regional banks down 15-20% today. So not a lot of confidence there in any way, shape, or form. The shorts are putting their eye on them, and you can see we're failed again into the declining 21 on the regional bank index. So those are the 5 major ones. Let's go to the dollar. At 10 o'clock today, some ISM data came out, and here's your 10 o'clock bar. Data took off to the upside. Dollar took off to the upside, and continued to get stronger during the day. This coincided with a reversal in precious metals, and it also coincided with a strong move higher in rates. Market not wanting strong economic data. Market is wanting the Fed to pause. So there's the dollar. Let's go to the precious metals GLD. You can see gap up and then a hard reversal at 10 o'clock and then just trickling into the lows of the day. Silver also had a gap up. All 3 of them gapped up. There's the silver gap up and fail, and GDX gap up and fail. Now let's go to a daily chart on here. We've been eyeing GDX, oversold on the stochastic, downtrend line very obvious, failing at the 8. This gap above the 8, and it held for the first 15 minutes. Didn't hold after 10 o'clock though. We took a position in GDX. We're down about 2.5% maybe on it now with the reversal. We know where our stop is. We should hold the lows of last Thursday below the 21 day. We know that we're oversold and we could go lower, but this hooked up with the gap up, very similar to, and then we were looking at this setup here. Here's the setup that took us lower. Here's the setup that took us higher. Uh, Here's the downtrend line. We gapped higher here. We pulled back a couple days later, held the 21, and then continued on this nice run on GDX. Broke the downtrend line here, got back above the 80 MA, but it just didn't work out so far. But our loss will be capped at 0.2% of the overall portfolio. It's a 4% size. And we've got our stop below the lows of last Thursday. So that's gold. Let's take a look over at bonds now. Well, first we'll look at the TLT. This sold off very hard. It's up after hours. After hours, Yellen came out and said we may exhaust our measures to stay below the debt ceiling by June 1st. Initially, over the weekend or early this morning, a report came out that they might have breathing room till the end of July as some tax receipts suddenly uh, got stronger and came in. But she came out after the close today and said June 1st. So we've got a big fight on Capitol Hill brewing, and the market does not like debt ceiling fights. You can't pay the bills. It has a lot of ramifications. So here's TLT, big move down, as I said, up over 0.5% after hours. So today's lows really need to hold, and that is our stop on the TMF position that we have, because that would take us continued downside would take us below the low of this range, multiple stops below the low of this range. So we're looking at this as of right now as a shakeout. If it doesn't shake out and we continue lower, we'll be exiting that. So that's TLT, and pretty much across the board. Here's the broad bond index down 1.3%. That's a pretty big move down. Let's flip and go to rates. The 10-year rate up a bit, very strong 3.5% today. The 30-year TYX up 3.8%. So rates now at the top of the range, prices now down at the bottom of the range. Let's go to Bitcoin. It has failed again at that 30,000 level. So this continues to be the island top. Recovered from this sell off when somebody dumped a bunch of futures last Wednesday. We recovered Thursday and Friday, but now down at the bottom of this range. We don't want to break below this 16 level, or that's a very clear breakout from the 16 to 18 range, breakdown from the 16 to 18 range on Bitcoin. The high end of this equates to about 30,000 on Bitcoin. I didn't show the VIX. The VIX was up slightly today, made a lower low intraday, rallied to be up 1.9% on the day, but still at an extremely generous level. This is typically when you're low, it's a tailwind to stocks, but you can get a little too low. It shows complacency. And then any event, like it looked like we were having a volatility event last Tuesday and Wednesday when we were selling off, but we didn't even get back to the 20 level. A move up to the 20 level is certainly acceptable. That's kind of the dividing line. You can see every time we get near 20 over the last month, that's been the cap. So a move above the 20 would signal some significant fear in the market. Let's get to the tail of the tape now, and then we'll take a look at some charts. You can freeze this to read the whole thing. We're operating under the bull case. Our day count. Okay, JP Morgan bought FRC. We talked about that. 10 a.m. ISM manufacturing up. Strong economic data, not what the market, certainly not what the bond market wants to see. Yellen, debt ceiling may be hit by 6/1. Those were the three pieces of news. We're at a 92% odds of a 25 basis point rate hike on Wednesday, and now we're at a 25% chance of another 25 basis point hike the following FOMC meeting, which is in mid-June. So higher for longer. Markets generally don't like that. Bonds certainly didn't like it today. Our day count from up 2 to up 2 with one consolidation, 3 days above the 80 EMA and the 21 EMA, expectations remain positive as long as we're above the 21, which we are on the big cap indexes, which is where our focus has been. Really choppy day today, basing into the close. Semiconductor strong, biotech, transports, industrials, and healthcare. Gold, silver, and gold and silver started out strong, faded immediately when the bond prices started dropping like a rock and the dollar gained strength. Oils, regional banks, real estate, Bitcoin, and retail weak today. We're only changing how in the portfolio. We bought GDX, as I mentioned, on that attempted move above the ADMA and that downtrend line, but it reversed, and that was responsible for most of the underperformance in the portfolio today, that and bonds. But one that did work very well today, NVIDIA, uh, on volume, breaking above this 280 level, very similar to this break above this resistance level, which was about 240 back on 316, gets to a higher level, consolidates. It's pretty much what it's been doing all year. It's just been a strong leader, move up, consolidate, move up, new level, consolidate, move up, new level, consolidate. Headed toward a new level now, relative strength, confirming it. This is really a must-own stock if you're in the market. They've got the AI chips, which, I mean, AI is the buzzword in the tech industry right now. That's all everybody's mentioning on their um, on their earnings calls in order to goose the stock. And it is what it is, and don't try to fight it. There are a lot of people wanting to short Nvidia, and they're all underwater right now. So there you have it. Nvidia. What else? I showed GDX. ON gapped up initially, but didn't have a strong follow-up day, ending just about flat on the day, still hanging right around that ADMA, and that 32 area continues to be critical for that. Our third holding, Lulu, continues to trend higher along the ADMA. Meta made a higher high post earnings. This is our fourth position, and our fifth is Microsoft. Nice consolidation after 3 days up after earnings. Other than that, we own TMF, which is basically leveraged TLT. We added GDX, and then we own UPRO and SSO, which are index ETFs. Corresponding, the underlying is the S&P 500. So a couple of other charts we want to take a look at. Well, before we take a look at those, let's wrap up. The bottom line for today, tight, less than 1%, tight range chop, waiting on FOMC on Wednesday. Note that the ATR of the S&P 500, and this is really what the VIX represents. It's the forward look at volatility of the indexes, and it's low, but the range of the S&P 500 has been low also. It's now at a year-to-date low of 1.08%. According to the measurements by MarketSmith anyway. And that's generally, lower volatility is generally supposed to be good for stocks. You could say that. We've been trending up with certainly some shakeouts along the way, but and now trying to make higher highs. This 41.95 is a big level, as is 41.90. That's 20% off the low. 23% fib off the COVID rally. We did stay above this 41.55 level that we broke out above on Friday. That's something we want to pay attention to. We want that area to hold, and then below there is the 21-day exponential moving average, which is moving up 6 to 7 points a day. So there's your S&P 500. So now a couple tickers that we want to take a look at of note today. Two leading stocks, both in the 21 over 21, had good days. DraftKings, EKNG, following through on its third strong day. So initially it failed. This has been really the setup all day, all year. You show strength, you break out, you fail. 3-day pullback, break the 8 near the 21. Now 3 days up. Wouldn't be surprised at all to see this just hang around at this level, especially with earnings coming in 3 days. The other strong stock today that has been a laggard but is reasserting itself, Celsius. We had an alert move above this 200-day moving average, but it was the fourth day up. A lot of accumulation recently in this. It does have earnings in 2 weeks. A pullback towards 100 on light volume would be viable for a starter position, and then see what it does uh, as we have earnings in 2 weeks. But this really looks good. Michael noticed the accumulation in this and the strong fundamentals. There's no question that it has the fundamentals, sales and earnings growth, 57% next year, going from negative to positive this year. Uh, we keep lists of the fundamental stocks that have fundamental strength, but the technicals haven't quite caught up to them yet. This is a case where they're starting to get in line, and nice move today on Celsius. Sorry, this is not in the 21 over 21 because it was below the 200-day moving average. That's going to wrap it. No, it's not going to wrap it. I'm going to show three three other strong stocks. Win, good Macau numbers. In Win, LVS, Las Vegas Sands. This is in the 21 over 21. Higher close today, moving above the little week and a half shelf. Churchill Downs also has gaming and the Kentucky Derby. Big move up on earnings. 2 days follow through to the upside. This may be a sell the news event on the Kentucky Derby. And MGM reported after hours today. It is flat after hours, but it kind of made its run the last 3 days on the Macau numbers that initially came out positive on Las Vegas Sands and Wynn when they reported. So that's going to wrap it. As always, love to hear from you. The email is don@revereasset.com. The phone is 855 Real Wealth. That's 855-732-5932. Remember, it's not how much you make in the markets, it's how much of that you can keep. And with that, I'll wrap up Monday, May 1st. This is Don Vandenbord telling it like it is. Thanks for listening and have a great day.